Good evening and welcome to Option Center. It's Sunday. Sorry, everybody, I couldn't be here most of the weekend. We had a family outing, meaning we had a hockey vacation tournament. It happens often during the school year and in the spring as well. So we did great. Thank you for joining us here. If you're new, go down to that bottom right-hand corner, hit that Options Center logo, and please subscribe. We are going to go through a lot of important information. We have a lot of good stuff. I want to go through SPX on multiple time frames, all the way down to the 65, and then we'll check out SPY and QQQ for the Elliott wave count and the traditional technical analysis, and we'll also check out Apple on the 65. So we can make sure we get our point across. So we are bearish, but the question is, are we going to go to a new high? Are we going to be bearish and continue this wave down methodically as a wave one? Or are we going to keep this topping pattern going and set ourselves up for a much more bearish scenario? Those are the questions that we're looking at. That's what we're going to try to answer here today. So stick around and make sure you like the video. Thank you for helping out in any way you can. There's other ways to help out if you want to go down in the description. If you like this information, it helps you out, then help us out. Okay, we're going to go ahead and close that up. We're going to go SPX on the monthly time frame. You see the channels, all this confluence that we got to on multiple time frames. This goes back to 1929, the crash of 1929. That's a trend line from there, and then you have a few more that are going here. We think that this channel, that we're at minimum going to test this channel, break down from it, and possibly test at minimum the bottom. Excuse me, the minimum was retesting these lows here, breaking this channel, and heading up from there. The next scenario would be to test out this 200 moving average on the monthly time frame and also the channel bottom here. That's what we're really kind of going for. And then there's more after that. But we are going to continue to do these videos often so we can kind of guide you through some of these bounces and some of the directions that we think the market's going. So far, so good. We are going to the downside. We're getting a lower high, but it's not confirmed until we get to this below this candle here. Okay, so we're on this monthly time frame, and we're so far back testing this 8 EMA. It's a trending EMA. I do suspect that we get some resistance coming in here soon. I don't think we'll hold this spot, at least from what the point of view that I'm looking at. But if you are a little bit more bullish, you're looking for a 1, 2, 3, 4, possible 5 wave move to make new highs. And that might end everything, or that might just be setting us up for much higher. I don't think that's the case. I think we're bearish. I think we're setting a lower high, and we need to continue this correction as at least, at minimum, A, B, C. So let's go ahead, and the month we have a lot more time on the monthly time frame. So this candle, don't put too much weight into it yet. Let's look at the weekly time frame. On the weekly time frame, here's what our minimum scenario is. We had our high. We're starting to form a channel, so that's assuming that this is a lower high here. And we start making our way down to the bottom of the channel. Now this would be an A, B, C correction. And what we have measured here, a measured move, is the A equaling C. So you take the measurement of A, put the top of B, and you have your outcome down here towards that 3,300 area. That would be our minimum for this channel situation. And then we can kind of reassessed at that point if we get down there. Okay, that's all I want to show on there. On the daily time frame, trend is our friend. We have our we have an uptrend line. I call it more of a pivot because we didn't really hold a third. We had a reaction off of it, but we didn't hold it as a third point. We have 2 points off of it. Just kind of makes it a pivot. So we were going to get some sort of reactions. We're closed right at it on Friday. We had our move down, broke down from it, retesting it. I do think we go a little bit higher, but I'm not sure we're going to actually hold that. I think we're going to retest the 20 and possibly the 100 to 50 moving averages here. So this kind of area that we have. Okay, so we're kind of breaking down. The main point of looking at this is we had that ascending triangle, and we broke out from this ascending triangle, and we still haven't really tested from there. So I'm looking for, if you're a bull, you're looking for a 3-wave move. And you're saying, and naturally we're getting this huge reaction off of here because we have bulls stepping in saying, hey, this 3-wave move is over. Well, with this 3-wave pattern, if that holds, there's only one more bear scenario that can come out of there. I mean, there's always tons of outcomes that you can project, but in a simple form, you have a 3-wave move. That's a correction. That's a corrective wave, and we go higher. So we're kind of looking for the market to continue this pattern to the downside. And there is a bigger bearish move to where we're still topping. I don't think that's the case. I was looking at it last week and before, but we have more information now. So I'm going to explain and show you how I think the market's kind of methodically going to continue down. And I think it gets right into our target area that we were talking early on. We were making these videos to where we were going to go to retest the ascending triangle, get down here, probably get a reaction, and then start getting into this area here, this consolidation area where we continue to look at this green zone that I have marked off. If we go to the SPY, we have it marked off in just a little bit different way on the daily time frame. I'm looking to get into this. Let me change the board here. This is my 65-minute board while I'm on the daily time frame, so that's not going to work out so well. A lot of information going on there. So you see how I have these consolidation areas boxed in? These aren't new. I've had these boxed in for so long. We're going to come down to, we have these trend lines here, the pivots, the 200. Yes, there's a lot of stuff going on. But what we're doing is we're breaking down from these levels. And we have to consider shorting the rip every single time, selling the rip. And we're looking to get into breaking this level as well and getting into this consolidation zone even before we get a much larger pullback. So I think methodically we continue possibly even lower before getting a larger pullback to maybe backtest this trend line here. But the important part is to look at this consolidation area. We haven't tested it yet. This is our breakout zone. We haven't backtested the breakout zone. Let me show you one different way to look at it, and that's through ES. I love to look, I chart all of these, the ES, SPY, and SPX, because it gives us points of views. Sorry, I didn't have these. I'm going on a tangent because I didn't have these prepared there. Now, look at these zones. Look at these zones of consolidation. Zones of consolidation. I also have the point of control here, a big volume node from all of this price action that happened throughout these years, really, since 2021. And so we're being pulled right into that point of control. I'm going to ignore this channel. I don't think this is the right channel to hold this. We're going to get reactions off of it, but I don't think this channel is going to hold. I think we're going to come down here to test the point of control, get some sort of reaction, maybe back test this channel and head lower, maybe to the bottom of this consolidation area. But we have a Elliott wave count that we're going to look at on SPY just in a little bit. So stick around. Make sure you stick around for the end of the video and make sure you like the video. So let's go back to SPX and we'll continue to the 65-minute, kind of get our point across, and then we'll go to SPY and QQQ. All right, so you see that green zone that we're looking for? We want to test that zone. We want to get into that chop zone. Let's go over to the 65-minute. Get a little bit more detail so we can see what's coming up in the next day or two and going into the week. So early on, we had a head and shoulder pointed out here. I have one of these circles left. This is the left shoulder, head, right shoulder, and this is the neckline. So I do think we back test this neckline, and we have the measured move that we still have playing out. So that goes right along with this methodical move to the downside. And this is just a consolidation. Go a little bit higher. I want to get above this high here. Back test. It could go a little bit higher. Maybe hold through, but we should reject off the weekly time frame and head lower. And our measured move for the head and shoulder is down here to the 4104. So remember that number there, 4104, or even just a little bit lower to about the 4100, 40. It's a zone. So this is consolidation zone that we're looking for. So that would be our measured move. We'd at least want to hit down to that point. So if we show our Elliott wave, voila. That's our 162% extension for wave 1 and 2 going into wave 3. I don't have this marked correctly. I haven't updated this. So wave 3, we have a 1, 2. We want to get that 3 into the 162 extension. Retrace to wave 4. And we're going to show this on SPY, so I'll just go ahead and go there. But if you look at SPX, the 4100 is our target. It's right in the middle of this consolidation zone, and that's just for bounce. We should continue lower after that as well. So let's jump in onto SPY. And we're using SPY a lot more often just so we can be much more relatable. And those who trade SPY, most people trade SPY and want to kind of translate those numbers, those targets, and those areas according to their chart, or at least, you know, what they're looking at. So again, this is the daily time frame. This is the 65-minute time frame, but this is the daily board. So we're kind of testing this consolidation zone again. I don't think we'll stick around in there. Let's move to the 65-minute board. You have this pivot. And if I go just a little bit deeper in here, let me crunch this up a bit. So we had our channel. We broke out from the channel and had a big move on Friday. Coming back to this pivot, if you notice how price action goes up and down around this pivot, it's the same thing with price levels. It's usually never right at that point. Okay, we have our turquoise head and shoulder neckline. I think that's kind of the point that we're looking at here. It coincides exactly with this red sell zone. Okay, so we had our positive divergence. We had our move down. Some people are going to think this move is complete. That's why we got such a heroic move on Friday, because it looks like we had our 3, 3, 5 wave move down. If all you look at is SPY, it looks like this is all complete and we start heading to new highs. That would be the bullish scenario. I think that we reject off here and we actually get a lower high and we continue to the downside, and that point of control, 4112, it's in our consolidation zone. I think we go lower. So let's go ahead and pull out this Elliott wave count. This is what I'm looking at. Right here is our projection. This is our primary Elliott wave count. There's another bearish one to where we actually move up higher, and I'll explain that. Let me explain our primary count first. Where in white we have our first initial move down for 1, 5-wave move down for 1, 3-wave move up, corrective move for 2, and right now we're in wave 3 for the white wave count, and in the turquoise we have 1, 2. This is a little bit different, so pay attention. It's a little bit different than last week. We're going a little bit more methodically because it fits. It fits our targets, our scenarios. It makes more sense right now. So 1, 2 in the turquoise, 3 in turquoise, and we had, and we'll look at QQQ. We think this is an A, a 3-wave move down for B, and we're working our way up for a C, an expanded flat, and we need a 5-wave move for this flat to be done. And we only have 3 so far. So I think we get a wave 4, consolidation. It shouldn't be too deep. And then we end off somewhere around the 382. All right, anything above the 382, and I think we're doing something a little bit different. It could still be the bearish or the bullish count, but I think it's something different. Our primary cannot go, our primary is not suspected to go above 382 retracement. That would be a typical wave 4. And in turquoise, we get our nice large move, maybe going into FOMC or so, where we start to continue to the downside, and we get a wave 5 for the turquoise, which would be the end of wave 3 for this white, the white count here. And then we start getting a bounce, and then we get another move down. So we have just a little bit more, and that would be our full wave 1 there. That would be our intermediate wave 1, this whole move. That would be 1, 2, 3, 4, and 5, all the way down to about the 50% retracement. If wave 5 extends more, and we'll have to see what the structure is. It could go all the way down to 62. But I think we have a lot of price action and a lot of stuff going on here to where we might get our bounce just from that 403, the bottom of that consolidation area that I was talking about. We might poke right through and then come back. And then you're going to look for a much bigger move after that correction to the upside that could last a few weeks. Okay, so let's go over to QQQ. And we might throw IWM in there as well, just so we can kind of see this push-pull that IWM has been the leader to the downside. It's just been relentless, and QQQ has actually been the leader to the upside. It's all, all the markets have been going down, but the Qs have been holding up the most. So if this type of price action continues, then what I think is happening is we're getting a leading diagonal here. So I think we'll have our 3-wave move down for 1, 3-wave move up for 2, 3-wave move down for 3. That's complete. 3-wave move up for 4, and we could test this downtrend line. It might be actually a little bit higher as well. We have another downtrend line that we could draw into the options expected move. Reject off of there for one more slight low. One more slight low for wave 5, and it can't, since this is the longest wave 1 is larger than wave 3, so wave 5 has to be smaller than wave 3. Okay, so that kind of gives us a scenario where we're pushing a 1, 2, 3, 4, 5 leading diagonal, and then we get some sort of retracement. And I think this is actually when the tech market starts to lead to the downside, when we get this retracement here. Okay, when we end this leading diagonal, we get a retracement, and I think IWM becomes the leader to the upside, at least holding things up, while QQQ just is relentless to the downside after. Okay, let's look at the Elliott wave count for QQQ. Okay, so we have in the white, we have 3 for 1, 3 for 2, and it's a leading diagonal, so all waves are 3s. 3 for 3. We're looking for 3 for 4. You see how I have the triangle up here, the downtrend line's a little bit higher, going into the 786 retracement here. So it's possible if the market is still, the tech market's a little bit stronger still, then we're probably going to get a little bit deeper retracement. It doesn't have to go there. It can go to 62, but if it's going to lead while IWM is still weak and has another leg down, then we could see a move up to probably 375 or so. And then this is just a projection from wave 1, or excuse me, the top of wave 2 to wave 3 bottom. So that would give our length of wave 3, just assuming that we do have some strength in tech and we get up to that 786 retracement here. Then that leaves room for another lower low. It cannot exceed 100%. So I'm looking at right in here. We haven't tagged it yet. The 62% retracement from the highs and the 382 retracement from this move here. All from this move here. So that's a good confluence here. I think that's where our target's going to be. And then we retrace after that. We'll talk about that much later and then go much lower. I think tech will take the lead after that. So let me go into IWM and we'll go to Apple. And Apple is such a leader in all of this. So I think it represents really, really well. And right now, I think that IWM is actually going to be a lot weaker. We may consolidate here for a little bit. We do have an ABC correction here. I don't think it's big enough, but we'll see. IWM is so volatile. We have a 1, 2, and we're completing wave 3. I think we're in wave 4 now. So whether it's done now or we consolidate a little bit more, I do think that wave 5 continues down much lower because we broke this trend line. We're back testing it. We possibly can go lower, make a maybe an expanded flat, and then head back up to retest it again. That's possible. Some more action could happen here, or we could just head straight down depending on our scenario of what I'm talking about. So if IWM is pulling us, trying to pull the market down, and QQQ is strong and heading up, then that would fit really well with our scenario. Okay, so that's really all I want to show you on IWM. And Apple, really Apple just shows the same thing as QQQ. We're looking for a leading diagonal. It fits this falling wedge here. I don't think the wedge breaks out very far, but I do think this is a 3-wave move down for 1, 3 for 2, 3 for 3, 3 for 4 into our target zone here, possibly into the downtrend line, and one more low here in order to get a divergence, another divergence, and then we start breaking higher into some retracements before leading the market much lower afterwards. That's our primary scenario. And we'll check out SPY one last time here.